You know what I find very interesting? You know, in the US, the last letter, how do you pronounce the last letter of the alphabet?
Z.
Okay. In the US, most people say Z, right? But then, so I expect that in the US, outside of the US, generally people say Z.
Yeah.
But then when it comes to this generational thing, on Kenya, KTN, NTV, they're talking about Gen Z. So I'm like, you guys say Z, but when it comes to generations, you say Gen Z. That one I don't understand. Why is that?
It's because it's a term. And
Okay.
it's a term because it's coined in the US. You see, actually, honestly, I have a lot of theory about Gen Z. I almost wrote a newspaper article.
Please tell us more.
So generations are usually, a generation lasts about 20 to 30 years. But in terms of generation naming, it's usually a group of people who have gone through almost similar experiences that shapes how they behave, how they think. Despite the fact that there will be a general blanket description, given that we all go through very different experiences at any given time, a Gen Z in the US will not typically behave like a Gen Z in Kenya.
Okay.
But for Gen Zs, there's a lot of homogeneity because there's a lot of internet. So there's a lot of shared culture and behaviors.
True. Yeah.
But a millennial who grew up maybe in Uganda may not behave the same way as a millennial who grew up in Mozambique. Or a millennial who grew up, or even let's go to the generation before. Millennial, it was Gen X. A Gen X who grew up in Uganda and experienced coup d'etats, and a Gen X who grew up in Kenya, they have very different understanding of government and military.
True.
The kind of respect, the reverence they hold to, it's very different. The one from Uganda, they see a military guy, they're like, me, I want peace, I don't want trouble. But now, the Kenyan one is more likely to be like, wait, what are you telling me? He wants to pick a brawl.
Yeah, there are big cultural differences.
Exactly. So again, the generation, so it's usually an experience. So millennials is basically people who grew up or sort of grew up or were born around the moment when we're starting to have a lot of developments on .com, the internet thing. We are basically born at the time when literally we are the guys who have experienced the most transitions in life.
Correct.
We were born when there was no real laptops in homes. Now people have iPads
everywhere.
We were born when
Fax
phones,
machines.
you had to use you pick a line, a handset and make a call and drop it. Now people are kind of moving around with their phones. I don't think there's any generation that has experienced as much transition as millennials.
Let's wait and see going forward. I mean, if AI changes things the way that we
I don't think there's... it's possible Gen Z, but it's not probably Gen Z that will experience that much transition.
It might be there.
It will be the Alpha.
That's the new one.
Now my son, the Alpha, my son is the Gen Alpha. Gen Zs, now the Gen Zs of Kenya, because of this experience I've had about questioning power, going forward, you will realize that you'll have a very different way of relating with government and their rights because of that particular experience that sort of is attributed to them, and all of them have a go at it. Yeah. So let's see.
Hi, welcome back to the Full Scale Podcast. I am your host, Adrian Twatwa, and I'm joined by my co-host, Timothy Mukiti. Tim, how are you doing today?
Doing very well, thank you.
Yeah.
How are you doing?
I'm doing well. Excited for another episode.
Yeah.
Thank you for joining us again. Thank you for listening, viewing from wherever you are. We appreciate it. We do not take it for granted that we have viewers and listeners. We started with exactly 0.
Yes.
So we're very happy to have all of you listening and following along. So thank you. Today's episode is Deconstructing the Deal, part 2, right? So if you've been following us, you'll have seen episode 9 of season 1. We talked about a deal that was Uber's investment in Move. That was the first deal that we deconstructed on the page or on the platform. People seem to really enjoy that, and we got a lot of positive feedback from that episode. So we decided we're going to do another Deconstructing the Deal, and we'll do as many of these as you guys have the appetite for. So let us know in the comments if you're enjoying this type of content, and we'll do more of this as we go. So today we're talking about Nala. Nala is a dynamic Tanzanian startup which is operating in the fintech sector, and we're going to talk more about them throughout the episode. So by the time the episode's done, you'll know more about them. But we're going to go through from when this company started all the way to its most recent deal, the eponymous deal that we're deconstructing today, which is the Series A fundraising where they raised $40 million. So that's the deal for today. That's the episode. Before we get started, huge disclaimer. We're not in any way affiliated with Nala or any of the individuals we're going to be talking about or entities. This is just our views and opinions based on publicly available information. So you're free to look all of this up and you'll find this information available. We were not involved in any of the transactions we're going to talk about. And of course, as always, this is not legal advice. So if you do want legal advice, talk to your legal advisors, talk to Mukiti Advocates, talk to Remington LLP.
Mm-hmm.
So come check out those guys or your trusted legal advisors, but don't watch this episode and imagine that this is legal advice. We disclaim all liability. So let's get started. So as we did last season on Deconstructing the Deal, we're going to take a company and its recent investment activity, and we're going to look at it through the lens of the previous episodes that we've done on the show. So we're going to go through topics such as who's the founder, why is the founder important to this business and its success thus far, what are the origins of the company, the idea, what sets them apart, what's their moat, what's the innovation behind this idea, then what type of funding are they going through or have they received? What type of market testing did they do? How did they develop their minimum viable product? As well as where are they now and sort of what's coming for this company in the future. So that's how we're going to look at it. Feel free to skip through to whichever parts of the video or audio you find more interesting. But yeah, let's get started. I'll kick us off with just talking about the background of the founder. So the founder of Nala, which is Nala, which is also the
Nala from
Lion King,
Lion
right?
King,
the wife.
Yeah.
Well, it was Simba's romantic interest, right?
Exactly.
It's a very interesting naming. So Nala was founded by a gentleman named as Benjamin Fernandez. So
actually, before you proceed, you realize that they also have a business called named Rafiki.
Yeah, that's what you're gonna when you get to that, right? So it's very interesting. I'm liking the tie-ins.
Yeah.
So maybe they'll have to pay royalties to Disney at some point. But very interesting naming convention. Mm-hmm. So Nala was founded by Benjamin Fernandez, who's a Tanzanian entrepreneur. Mr. Fernandez grew up in Tanzania before moving to the US for studies. I believe he went on a scholarship. Mm-hmm. He holds an MBA from Stanford Graduate School of Business and an exec ed from the Harvard Kennedy School of Government. Prior to founding Nala, he used to be a television personality in Tanzania, actually. He has quite a storied background. Like if you go through his Wikipedia, there's so many different things that he's done and experienced. But for the purposes of our conversation, I'm just going to limit it to this. Yeah. He also worked at the Bill and Melinda Gates Foundation. He then returned to Tanzania and founded Nala in 2017. And also, I guess I'll also flag that in 2020, he was listed as the 15th most influential Tanzanian in the country, which is really cool.
Yeah.
I don't think I've ever been voted most influential of anything.
All the way since even not in primary school or
I was
high
voted,
school.
In high school, I got friendliest.
Oh, really?
Yeah, it was
nice.
like I would do random things.
Impressive.
So yeah, whatever, I'll take that. I'm happy. If you ever meet me in real life, hopefully that's the impression you get.
Yeah.
Okay, so about the founder, right? So we talked in season 1 about the importance of having a founder who has strong conviction for the idea, is relentless in the pursuit of what they're trying to do. They're going to adapt. They're not going to give up. Mm-hmm. They've tried things and they continue to work on this business and iterate, right? You need a really strong founder in order to succeed. So, I mean, I don't know this person personally, but based on his resume and what we find online, he seems to be a very well-educated person. Mm-hmm. So high pedigree, unique experiences and skills. So I can imagine going from being a TV personality, all of the other experiences that he had. He was a member of Y Combinator, which we'll talk about at some point, but shows, a real commitment, resilience, a pretty strong network, I'd imagine. So Stanford Graduate School of Business, Harvard Kennedy School, Bill and Melinda Gates Foundation. I'd imagine he has really strong networks through those organizations. And so you can see the importance already of the person that is representing this company and what perhaps has led to its success thus far. So that's just a snapshot of who the person is behind the business. So now maybe we can go into what is the business. But maybe, Tim, you can first talk about what's the idea or the origins of the idea for Nala.
Yeah, I'm happy to talk about the origins of the idea. But even before I speak about it, as you were doing the introduction, it has occurred to me that, deconstructing the deals is becoming one of the very exciting episodes to prepare for, because as you interact and read stories of founders, how the businesses have progressed, they're very inspiring. You learn a lot, especially about grit, resilience, aggression, clarity of vision, and what you want to accomplish. So I would say this is one of those things that we're going to find quite exciting, and honestly, I think he's a very interesting. The founder is very from the videos that I've watched, from the conversations I've seen, as we just sought to understand Nala better. I think he's definitely someone you could probably learn a lot from, even having lunch with.
Very charismatic guy. I sent him a friend LinkedIn request.
Nice.
Let's see if he accepts. He's a random person.
Of course. Maybe he'll think, who is this random guy? But very interesting. We're learning a lot. Awesome. Now on to the origin of the idea. So Nala began its journey focused on improving money transfer services within Africa, especially in Tanzania, and growing outwards. And the founder, Benjamin, recognized the potential of financial technology to bridge the gap in affordable and reliable remittance services, especially for the African diaspora. In truth, statistics show that the African continent is the most expensive continent to send money to. And I reckon from Nala's website, really, they stated that in the year 2023, a whopping US dollars 49 billion was sent from the diaspora to Africa. Now, out of this, about 3.3 billion was expended or lost in fees.
Wow.
Now, that represents about 7% of the entire amount that was deployed from diaspora to Africa. And then again, is on average, the cost for sending money back to Africa or from diaspora to Africa averages between 7 to 9%, which is quite high, really, because you're almost going closer to 10%. So for every $10 you send, $1 is lost to transaction fees, and then of course it doesn't end up doing as much good for the intention that you wanted it to.
Correct.
Therefore, in order to just sort of address this issue, so Nala initially offered a consumer app that enabled users to send money from Europe, the UK, and the US. And such other diasporas to several African countries, including Tanzania, Kenya, Uganda, Rwanda, and Ghana. And the app quickly gained traction, due to its ease of use and lower transaction costs. And I think those are some of the things we will note about Nala specifically in terms of their focus. One of them, reliability, ease of use, and then also the cost element. I also just tried to check a bit about, how they can show you real time. If you send, let's say, $200 or maybe $1,000, you can see how much is supposed to get to the person if you're sending in Kenya, in terms of Kenya shillings, in terms of Forex.
Okay. So
and they have
currency conversion.
Yeah, exactly. Currency conversion. And they have sort of attractive rates, compared to some of their competitors.
Okay.
So over time, Nala expanded its services and has entered new markets and integrated with major platforms like Kenya's M-Pesa, just to allow users to pay local bills directly into mobile wallets.
Okay.
So just a bit about the company. The company has seen significant increase in transaction volumes and revenue, perhaps driven by the work that they're trying to build to be as reliable as possible and as fast as possible in terms of remitting money. And as and I believe we'll talk more about this, as eventually become profitable and revenue positive this year, I think.
Yeah.
This 2024, yeah. That's already an incredible, an impressive feat.
Yeah.
Given that the startup is just about under 7 years or thereabout.
Correct. Yeah. From 2017.
Exactly. So that's quite impressive. Yeah, and one of the key innovations of Nala is Rafiki, which is a B2B payments platform, basically B2B, business to business, that is designed to address reliability issues in remittance. So perhaps Adrian, you could tell us a little bit more about how Nala works.
Sure.
And
Okay. So I figured it would be best if we just try and simplify as much as possible of what exactly they're doing and how it works by taking a real life example. So let's say, Tim, you're in the US, you're based in the US, that's where you live, and you have a bank account there, that's where your money resides for all intents and purposes. And you want to send me money for something. Let's say, we're building our fitness app again. I'm here in Kenya, I'm trying to get the money. You are going to send it to me. Let's assume I have a bank account here or M-Pesa wallet. You have a few options of ways you could send that money to me. I mean, other than coming with the money on a plane or something, or sending the cash with someone. So typically you'd find you could do a bank transfer, the sort of your very traditional method of transacting money or transferring money. When it comes to money remittance being sending money from abroad to here, respective of where we're sitting. So from here, remittances are coming from outside of the continent onto the continent. So you could send a bank transfer. The pros, of course, direct transfers from banks are very straightforward. It goes from one bank account to the recipient's bank account. Very straightforward. It's also very secure because there's a long regulatory history and strong infrastructure that's been built to secure those transactions over many decades and over time. The issue with that is bank transfers usually have high fees. So I might send $10 and the person receives $7 or $6 or however, depending on the transaction fees that we've talked about. Also, the transfer times are quite slow. It may take a business day or 2 or 3 to actually receive the money. So if you need the money urgently, it's not the best option. Also, you mentioned exchange rates. So the exchange rate you get, especially when you're transacting in different currencies. So from the USD to Kenya shillings, what's that rate on any given day? The rate you're going to get from your bank during that transfer is not the rate you're going to see on Google when you Google like USD to Kenya shillings. So there's going to be some amount of loss there in Forex, and that's another concern. So for different reasons, bank transfers may not be the thing that you need at that point. You could use other methods, less traditional methods like cryptocurrency. You could send someone Bitcoin or Ethereum or something like that, which have low fees, they're decentralized, there's speed, there's access, all of these things. But again, there are disadvantages of volatility in the actual price of or value of the currency. So you could send it when it's worth $10 today, and then by tomorrow it's worth $2. So that's a problem. Not everyone has widely adopted cryptocurrency for various reasons. And also regulation is still pretty low when it comes to cryptocurrency. So that's also maybe not, it might not be the most attractive option for you sending money to me to do the business that we need to do as soon as possible.
Yeah.
We could also use Western Union, which we know, I think that's a very familiar name, especially on the continent. Very global reach that Western Union has. So you can send from many different places across the world to the continent. You can pick up the cash in different forms. You can pick up cash from like an agent, or you can have it deposited to your account. All sorts of things. And there's trust, I think, with Western Union. It's sort of a brand people know. But again, there's high fees, transaction times are a bit slower, etc. So you could use all of those different forms of remittance, or you could use a money transfer service, right? Of which Nala is one. So Nala is one of the things they do is a money transfer service, right? So some of their competitors are WorldRemit, Remitly, TransferWise. So if you're familiar with those brands, then you have a general idea of what Nala does. So let's take that example of you're sending money from the US to me here in Kenya. So how would you do it? So you would have to set up in the US, wherever you're sitting, in Texas or California or whatever, you set up a Nala account on your phone. It's an app. So you download the app, you create an account, you then you do basic KYC information, make sure your money is not like funding terrorism or source of funds, that type of thing. Then you create the account and link it to your bank account or your card, wherever you have a card that sort of transacts cash. So you link your account, then you now select me as the recipient. You say, I want to send money to Adrian. You enter my details, and then you send the money, you hit send. So I guess for me, the thing I always try to demystify is like what actually happens when you hit send. So on Nala's end, they go through the process of going through your bank and withdrawing that amount, right? So they debit your account, they withdraw that specific amount. Then they say, okay, Tim is sending 100 USD to Adrian in Kenya, and he wants Adrian to receive it in Kenya shillings. So now they need to do a conversion from that 100 USD to X amount of Kenya shillings. So as you've mentioned, they do real-time currency conversion within the app. So I can see the rate that Adrian's going to receive in Kenya when I send him this USD.
Yep.
So he's going to receive X amount of Kenya shillings. So they also try to reduce the transaction fees at that point. So, of course, they have to make a margin, right? They're not doing this for free. But compared to bank-to-bank transfers, my understanding is they have better rates. So as opposed to, let's say, losing 7%, maybe you're losing, I don't know what their numbers are, but let's imagine it's 2, 3, 4%, something lower than the exchange rate and the transfer fees that you'd pay with a bank-to-bank transfer. So something that makes it more attractive to use their transfer service as opposed to the brick and mortar established transfer systems that exist.
Yep.
So that money then goes through their payment platform. It arrives in Kenya, and it's now integrated because Nala is integrated with the local financial systems here in Kenya. You then receive that money in your M-Pesa wallet. So I could get it in my M-Pesa wallet today, or I could receive it in my bank account. Those are the traditional those are the main methods through which I would then receive that money in the exact amount that you have sent it based on that conversion.
Yeah.
So that allows me to receive the money in a bank account if I have a bank, and it also allows me to receive it in M-Pesa if I have a M-Pesa wallet, right? So again, a lot of people on the continent might not have bank accounts because there's many different things you need to open a bank account, but many people have mobile phones, and a mobile phone gives you access to a mobile wallet, and therefore you can receive money even without having a bank account. So those are the ways in which they now send the money to me. I receive the money, confirm receipt, and then hopefully I don't spend it all in one place and I actually use the money for what you've sent me, why you've sent it to me. And that's sort of how they work. That's how the general gist of how the transaction works and how their money transfer service works. Is there anything there that I missed that you think I should highlight?
No, I think you've covered it very well. And maybe just to add that, I understand that Nala has evolved. Initially, there was a bit of reliance on that particular platforms and payouts.
Okay.
And they've been working now and there were a bit of reliability issues where maybe one of their partners would be down and money was not able to get to the intended party. Okay. But I understand that they're working on fixing that and relying on Rafiki infrastructure in order to just ensure that there's more reliability in their system in terms of sending money. And I think the numbers that I've seen in terms of how the reliability looks like, it's pretty impressive so far.
We've mentioned Rafiki a few times. Maybe I'll take a shot at trying to explain what exactly it is and how but my understanding is it's their own proprietary transfer system. So it's there is an infrastructure of making transactions or payments from point A to point B. Yeah. So a rail, if you would, a payment rail, you could rely on someone else's payment infrastructure, their rail, and say host or make payments through your rails, and I will pay you a certain fee. Yeah. So of course that would also cost Nala money if they're doing it through a third party provider who is the one who is sending the money, or the money is being sent on their platform or their rails. So it sounds like over time, due to the reliability issues, security, all of that, Nala has decided to create their own proprietary transfer system or platform or rails. And that's what Rafiki is. So it's a friend in a way, right? So it is now what they're using, their own rails to make those transactions happen instead of having to rely on a third party provider at cost and perhaps at also the risk of not being as reliable. So that's our best, until we get Benjamin Fernandez on this podcast to explain it to us better. That's our best understanding of how exactly this works.
Exactly.
So it's integrated into mobile wallets, into banks. So presumably they have agreements with Safaricom, with mobile money wallet providers, with local banks. In order to do that, they will also have to meet and satisfy local regulatory regime. They also have to comply with the regulatory regime. So that means that Nala has to be in compliance with the local financial laws, both in the UK, US, Europe, wherever the money is coming from, as well as locally in the jurisdiction where the money is being received. So in Kenya, Rwanda, Ghana, all the places we've talked about. as well as doing the currency conversion internally and quickly. But anyway, maybe I'm preempting the innovation here. So what is the innovative idea? Tim, maybe you can walk us through that, because the question I had is, we've talked about World Remit, Remitly, TransferWise. M-Pesa also has M-Pesa Global, where you can send money abroad and all this, or receive money from abroad. So the question is, what is the innovation here? What's the innovative idea behind Nala? And also, what's their moat? What's their competitive advantage in the market that makes them stand out and perhaps makes their position in the market defensible compared to their competitors?
Yeah, so number one is that, of course, the innovative idea sort of starts from wanting to make it easier to remit money from diaspora to Africa. Basically working around providing that solution to people who want to remit money. But they're not the only business that or startup that is doing that in Africa. Of course, there are competitors that are doing that. But now, I guess where the innovation, I mean, there is still innovation in terms of coming up with that infrastructure, being able to be able to provide those kind of solutions, even as you compete with your competitors. But one of the bigger innovation, and in terms of something that perhaps could set them apart from their competitors, is building a system that is more reliable. And reliability, having an infrastructure that has less downtimes, and there is more certainty that once you send money across, just like you've explained the process, it gets the person you wanted it to get to, and at the time when you want it to get to. I mean, it wouldn't be very exciting if you send money for an emergency. Maybe you're in the US and they tell you your house is flooding, then we need somebody to come and fix something, and you send money and expect that tomorrow, the contractor or whoever needs to start the work shows up and is paid, and then money is actually paid, reflects in your country, your home country, maybe 3 weeks later. That would
at all.
If at all, exactly. There are those such challenges, and of course, so the idea for them is to build a reliable, cost-effective infrastructure tailored for Africa's unique landscape, and that is the idea about that is to support consumer remittances through Nala. Basically back to the process that you have explained. As a consumer, when you want to send, you want to send money across, and this platform has integrated with local mobile money services such as M-Pesa in Kenya, and also leveraging on local networks in order to reduce the transaction cost and increase reliability of remittances. So another project of theirs, of course, is Rafiki, and perhaps it's mostly the reason why we have having this conversation. I mean, so of course, recognizing of the broader issues in Africa in terms of payment systems, and Nala decided to build their sort of an infrastructure that addresses the frequent failures and efficiencies that exist in the payment networks. The Fiki, being a B2B payment platform, is able to sort of support the B2B and business to business kind of transactions, but as equally sort of, I understand it's what they also rely on to drive efficiencies on the consumer platform on Nala. Okay. So that you're able to, you're able to sort of guarantee or to ensure that transactions are moving more seamlessly. You have less downtimes, and you're not risking your reputation as you do business.
So it sounds like it's primarily built as a way for businesses to make payments as between themselves. So from one business to another business. Yeah. But because that infrastructure is already built and it's robust enough, it can then also assist with the remittances, which are basically from one consumer to, let's say, another, right? So someone in the US sending to Kenya, they can use the same infrastructure that they have already built, Nala has already built, in order to make those payments more reliable, more transparent and faster, and also perhaps reduce the fees and the transaction fees and the friction there, right? Because if you're not relying on someone else's platform, you don't have to pay someone else, and so each transaction costs a little less. Right? Because you're not also putting it on another platform that you need to
you're
pay
not
for.
relying on third party, so that's going to make, of course, your business more efficient.
Correct.
It's a win in two ways. You're reducing the cost of your business in terms of supporting your clients and consumers. On the other side, you have now ability to guarantee consistency and reliability, because you're in charge of that system. You're not relying on third parties who you have no control of what they're doing and what their inefficiencies may look like.
Got you.
Yeah.
Awesome.
So I guess that equally builds towards the discussion around a moat. And maybe just for the sake of our audience, we have discussed the term moat a couple of times.
Yeah.
I think in a couple of episodes before. But basically, your moat is what makes your idea unique in a way that your competitors will be distinguished from you, and it's sort of an advantage.
Correct.
It becomes harder for people to replicate exactly what you're doing.
Exactly.
And one of them for them, of course, is that building the payment infrastructure. And I think Benjamin says it's Africa's infrastructure is 1% built. Exactly. And he's trying to change that, and of course, if something is 1% built, that's very slow. So perhaps if we have more payment infrastructure being built and strengthened, maybe it will be cheaper to transact within the continent or across a continent, send money in and out.
Correct. It's a very catchy phrase or slogan, because it shows the magnitude of the problem, but it also shows the scale of the opportunity, how big of an opportunity there is there if you are able to actually get that to 100%, right? So
exactly.
I see why he was a TV personality. And marketing, branding.
And Nala has also very phrases that you wouldn't forget easily. So another one that I found interesting is the description of African population. That at the moment we are about I think 1.3 billion in the continent, and it's projected that by 2050 the population will be 2.5. That will be a growth of about 1.2 billion, and they're saying we are building for the next 1 billion. I think the word is not next, or basically it's sort of indicating that we are not necessarily sitting here for the guys already here. We're already building into the future. We're already starting to provide solutions that are going to help the next 1 billion in the. And I think those it's a very interesting way to describe the problem, so that you're also seeing it in a futuristic way as you address today's problems. Perhaps you're also starting to build for the future.
I think they're doing a good job of marketing themselves, but also making the problem understandable and showing the vision of where they're going. And I promise these guys are not paying us, right? Indeed. But I think generally they're doing a good job, at least online, and just being effective at communicating what it is that they're doing and the problem that they're trying to address on the continent.
And just to add one other thing that perhaps is good for them and is perhaps works towards setting them apart is a deep integration with local systems, like we've already mentioned M-Pesa. I mean, the reach of M-Pesa, perhaps in an economy like Kenya, it's big, So when you integrate with such a system, you almost make your ability to do, to support transactions much easier.
You literally talked about that in season 1, episode 1.
Yes.
Very funny.
Okay. So Adrian, do you want to take us through a bit about Nala's formation and market testing and MVP?
Sure. So we've talked about what the idea is, the person behind the idea. So how did they get started? How did they test? And how did they get to, where they are now, right? Or where to the point where they started getting funding. So Nala was founded and initially registered in Tanzania. We said that was about 2017, but they've now expanded into a global entity with operations extending to the UK, the US, and the EU, the European Union. So their strategy has basically been to establish strong operational bases in key financial hubs. So the ones we've just mentioned, essentially. But their focus really sounds like it's still the African market, that remittance into African markets. I think they are planning to expand into other geographies and other
Asia
continents.
And Latin America.
Correct. But it sounds like their focus is very much so the infrastructure for the next billion, right? They're building on fixing this infrastructure that's only 1% built. That is still their core mission. They have offices in Nairobi, Kenya, the US, Netherlands. I think there are even others that we saw, but those are the ones I think worth mentioning. And in terms of their legal structure, we talked about season 1. You structure a company in a way such that you limit the liability to the shareholders, the beneficial owners. So we don't have any information on their actual legal formation and legal structure, but we assume that it is something that limits that liability. So we're assuming it's some sort of limited company whereby anyone who comes in as a shareholder, some of the shareholders we're going to talk about who have come in for Series A, for seed funding, all of those people would presumably be limited in their liability with respect to this company. And if any of that doesn't make sense to you, there are episodes in season 1 that you should go check out where we really dive deep into what limited liability is and formation and structuring. So that's the formation angle, market testing and MVP. So this started out, I think it was really just him really testing, asking people questions, what are the issues that you're having? What are the key pain points when it comes to remitting? So there was some initial market research, particularly people in the African diaspora. So if you're in the US, you're in the UK, you're in Europe, wherever you are, how easy or difficult is it for you to send money to people back home on the continent? What are the pain points? It sounds like the things that came out of that research were high fees, slow transfer times, and unreliable services. So it sounds like those 3 things were some of the key insights that they then used and really used as a roadmap for the way that they were building the MVP for Nala. So they developed a very basic version of the app that really just did the basic thing, sending money from one wallet to another, from abroad to a mobile wallet, that with just the core functionalities without all the other additional sort of features. They tested that with a small group of real users. Of course, the users that you're testing with need to be representative of your target market so that you get that product market fit. So they validated that with those users and then continued to iterate on the product until it became the Nala that we know today, the app that you can download today and send money across jurisdictions, across continents. So after they did that, now it's sort of scaling, right? Scaling is the plan. If it works, you're able to do it in one jurisdiction, it's working well, you now continue to broaden your reach. So now they're scaling the business. A lot of the funding that they're receiving, I imagine, is going into that very mission of scaling this business and making it, building that infrastructure for the next, for the next 1 billion and for 99%, that issue that they're solving. So that's all of the history. Now we're talking about the deals, so the funding. So maybe, Tim, you can get us started on what amounts of funding have they received? When did they receive that? Who were the people that were investing in the company? All the way to where it is today. And then we'll touch on the Series A, which is the big headline deal that's been announced recently.
Yeah, exactly. So we are now getting to the meat of the the reason why we are actually discussing this deal. So they've had a history, and I have to say that the data that we have here is mostly, we have relied on PitchBook to get this data. We've of course also searched other sources, but they have had literally, when you look at the amounts they have fundraised over time, it looks like growth in leaps and bounds, from very small amounts initially. Well, small compared to what the deal that we are discussing today, which is a $40 million USD Series A raise. And we assume, of course, they perhaps did a bit of bootstrapping. But in 2019, a deal completed in January 2019, they raised an undisclosed amount. Perhaps it's not publicly available, And this was pre-seed funding, and the deal was led by Accel. Other investors included Gun Ventures, 9 Yards Capital, Hard Yaka, Venture Sook, Heart and Heart, and Tom Williams. They basically had a couple of investors for that.
Sounds like VC funds primarily, and maybe an angel investor.
Well, I think the business is still at VC stage in terms of the kind of investment it would be attracting.
Yeah.
But that was well, there's also a bunch of individuals. There's Tom Williams, So, and they also got Accelerator / Incubator funding from Y Combinator, in 2019 in March.
Correct.
And this was 0.15 million.
Okay.
I think that translates to about $150,000.
Yeah, $150,000.
Yeah, $150,000. And they joined Y Combinator as part of the winter 2019 cohort. And they received a funding of $150,000. And this came in forms of safe notes that were converted into equity subsequently. Yeah.
So just to pause there to, I guess, re-highlight the importance of, we can look back now and see that this business has been successful to the point where it is now. But incubators, accelerators, the Y Combinators of the world, we talked about the importance of them and how they can really accelerate, right, your progress. So maybe the leaps and bounds that we've seen, a lot of it may be attributable to the experiences that the Benjamin Fernandez's team earned while they were at Y Combinator, the networks that they developed there, the infrastructure that they received, and the networks, the help, everything that they got out of that to then push them forward. Last season, we also talked about safes, right? So when we talk about safes converting into equity, we sort of know what that means and the fact that it was a promise, right, for future equity. And maybe that's now converted, presumably, since there's been a price round since then. So you can imagine 150,000. We don't have any numbers on the valuation of this company because it's not publicly available. But you can imagine $150,000 when they were at that stage, when they were at Y Combinator. What's the value of that amount now when there's a Series A that has come in for $40 million, right? Y Combinator has probably received, they've earned quite a bit of growth on that investment. So again, speaks to the importance of getting in early on these types of companies, taking bets on startups on the continent that are really trying to change the way that we do things. So, and again, another pitch for people on the continent and outside the continent to really try and invest in startups. It's a risky asset class. Take legal advice, take professional advice. But if you want outsized returns, this is a place where you could be looking.
So again, there was a seed funding in 2022, which was completed in January 2022 of $10 million.
Okay.
So of course, it attracted some new investors, such as DCG Expeditions. And I have to point out that that series of that seed fundraising was led by Amplo.
Okay.
And then we had other investors such as DCG Expeditions, Shine Capital, the MBA Fund, Axel, Bezema Venture Partners, DFS Lab, Jonas Templestein, Alex Boziz, and a couple of others.
Okay.
So the particular reason for the funds, of course, was to hire more talent and foster growth. And I think we'll perhaps when we talk about the current status, we'll touch a bit on, the kind of talent they've hired, their numbers in terms of staff, and equally the funds were earmarked to enable them to expand their growth efforts in the UK, US, and Europe. Yeah.
Okay.
So let's go to the more exciting bit, the Series A fundraising. One of the largest, a leading fundraising round in Africa. For this year, one that equally helped the month of July 2024 close very big deals in Africa. So perhaps you can let us know a bit about that and
sure. Just before I get onto that, just to flag that again, it sounds like there were names there on the investors who came in at the seed round that you had already mentioned before. So it's repeat investors coming in again in later rounds, validating the fact that this is a company worth investing in, good signals all around, and people coming in for more and more means that, they support this company. So again, good signals there to get your investors, your initial investors coming in for follow-on investments in later rounds. So Series A funding, this is the sort of the headline deal we've been talking about, the deal that we're deconstructing. So it's a Series A fundraising. Nala raised $40 million in a Series A round. So that's a price round. The investors in this round were, again, primarily VC funds and angel investors. So Accrue Capital, DST Global, Amplo, Norscan 22, and HOF Capital. Many of these we've mentioned again in the previous rounds. These are all VC funds. Again, we talked about how VC funds typically invest. They take early bets, hoping that a few of those are going to really win big and make outsized returns that even if they do lose money on other bets, those few bets that win will win big and really they'll cover all the losses in the other investments. They also attracted angel investors such as Ryan King. He's co-founder of Chime. Chime's an online banking platform in the US. Vlad Tenev as well, who's the co-founder of Robinhood, which is an investment platform also based in the US. So some pretty big names coming in when it comes to the angel investor landscape, which also might indicate things to come. So if I already am part of an established or have founded an established company in the US that's dealing in a similar space, and I'm now investing in an up-and-coming business in a similar space in Africa. Again, we talked about maybe there's synergies here that they'll look to get down the line. Of course, having people like that as investors is really cool because then they can also be advisors for you and help you navigate things that they've already sort of surmounted in their jurisdictions. So it sounds like a really promising round. And hopefully sign of good things to come down the line. Also, just to note that the last funding, the seed round you talked about of $10 million was in 2022. This Series A fundraising is in 2024. So 2 years down the line. Again, we talked about the runway that you'd expect in terms of how long should you take between raising in priced rounds. How long should that money typically last? So I think that's right around the sweet spot. We talked about 12, 18 months, maybe 24 months. So it looks like they used that money over the course of 2 years and now they've raised the Series A. We probably don't expect them to raise again in like the next 6, 12 months, but who knows? We'll see what happens.
Yeah.
And the purpose for this funding was to support their expansion in developing new services and continuing to build out the payment infrastructure, which is Rafiki, which we already talked about. So I think we've already covered, who the key investors are over time, how long this has been going, the investment journey that they've been on. And now that we've covered the funding and that trajectory, which seems to give them a strong foundation for what's to come and their scaling efforts, so they can go full scale.
Yeah.
So let's talk about scaling, Tim. How is Nala scaling, or what are they doing to scale this business?
Yeah, so one of the things is that they are doubling down on their B2B payments platform, which they launched in March to serve global businesses making payments into and out of Africa. And they also plan to utilize the funds they raised in Series. They have raised in Series A to scale the remittance business to serve Asian and Latin American markets.
Cool.
So that's part of how they are, scaling, and perhaps also to enhance their business within the countries which they're already having operations. Yeah, but maybe you can speak a bit about the current status. What are the numbers like? How do they look like now?
Yeah. Recall they started in Tanzania as a Tanzania headquartered or originally a Tanzania-based business. They're now in all the jurisdictions we talked about, in the EU, UK, the US, and they enable people to send money across 249 banks and 26 mobile money services in 11 markets across Africa, which is quite impressive. They've integrated with mobile money services like M-Pesa, and remitters can pay bills directly into mobile wallets, as we've discussed. And they are now profitable, which is really cool. So they're cash flow positive, and they've increased their revenues 10x in the past year. They have 500,000 customers worldwide and nearly 100 employees, which they've grown from. I think they started with like 7 employees. I mean, it started with 1, I'm sure, but they've grown now to nearly 100 employees, which is quite impressive. And I just wanted to do, there's this, again, we talked about their website and how they have some really cool information on there. There's this little timeline that they have on there by Benjamin Fernandez of what happened when. And I think it's a good lesson in that success is not a straight path, right? So 2016, testing out various ideas during school. 2017, graduated, moved back home to Dar es Salaam, no funding, early testing. 2018, convinced a co-founder to join, built a domestic payment service in Tanzania, received cease and desist letter from the biggest mobile money service in Tanzania. 2019, got into Y Combinator after 5 attempts. Then his co-founder quit 1 week after demo day. Struggled to raise pre-seed money, but a few people bet on the product, on Nala. 2020, no product market fit. COVID pandemic, pivot the business, shut down old business, do layoffs. 2021, running out of money, pivot the business again, start building cross-border payments. Some investors told us this would never work, running out of money. 2022, new Nala consumer cross-border fintech business goes live, growing fast, raised 10 million seed round that we just talked about. 2023, scale to 500K users, 10x revenue growth, profitable. 2024, raised $40 million Series A, one of the largest Series A in African tech history. So you can see, and actually there's another quote I saw of his online where he said they ran out of money like 4 times, where they were just completely had no more money to run the business and it's just done. So you can see, even with this type of business, which now we look back and in retrospect, it's thriving. Hindsight is 2020, but when you're there in the trenches, you never know if it's actually going to pan out. So you have to have that grit that we talked about so many times in season 1, the resilience, and you have to just keep moving forward.
Exactly.
And keep pivoting. Several things failed and he continued pivoting the business, trying new things, adapting until they got to where they are now. So I think that's it for Deconstructing the Deal. We'll have another one, I'm sure, before long. But for Nala, that's sort of what we have for now. Let us know what you guys thought in the comments, and share with us on LinkedIn, wherever on all our socials. Just let us know what you guys thought about the episode and if we should do more of this. If there's more about the deal that you wanted or less, anyway, it is what it is. Let us know. But for now, let's go into the interesting thing of the week. Tim, do you want to start us off?
Well, my interesting thing of the week. Not this week really, but okay. I think actually it's this week. Somebody invited me to join Toastmasters for a session.
Toastmasters?
Yes.
Do you want to tell people what that is?
Toastmasters, they base, as far as I understand,
okay,
is that they're a group of people who are passionate about communication, and they basically go through modules, experiences, and speaking sessions where you improve your communication style, your effectiveness in your communication.
Okay.
And basically for their meetings, they will have a session. So not a session really. They will have a theme. So that particular one I attended, the theme was do the hard things first. So basically, most of the speeches, literally things were tied around doing the hard things first. And they were very lovely speeches, which I enjoyed. But that statement, that it was repeated over and over. Of course, there's a book actually written, I don't remember the author, about doing the hard things first. But the lesson that I took from that encounter or that meeting is how much we can really accomplish if you take a deep dive and do the things that you consider hard or things that make you uncomfortable. Just do them and do them fast, and maybe you have a bit of time to do the things that could have been easier. Otherwise, if you start with the easier things, you can always tire yourself out or find a reason to procrastinate. So that was the interesting thing for the week for me. But what was yours?
Oh, nice one. I think that's really cool. Also, it resonates with me personally because I'm more of a morning person. So if I have a task to do, it's the tough task, it's the first thing I'm doing in the morning when I wake up. So when I first sit down at my desk, that's what I'm going to start with. By 11 noon, I feel like now I'm transitioning to things that I find easier.
Yeah.
If it's a really tough thing, I'm not going to start at 2, 3 p.m. I just don't have energy for it. So I resonate with that. Getting things done earlier also makes you feel like you've already accomplished something. Like going to the gym first thing in the morning, if it's your hardest thing, then you feel like, oh, I'm already way ahead of everyone else because I already went to the gym and I did all this. So yeah, cool. Very interesting thing. Thank you. My interesting thing of the week is something I learned from the Mel Robbins podcast. So she says, confidence is not something that you have. It's something that you do, which is I found really cool. So the context being, people say, well, there's this thing, I see it and maybe I want to do it or try it, but I don't feel confident. Like I don't feel confident enough to do this thing. So what she's discovered, apparently through doing all this research and all this, is that confidence is not really a feeling. It's a willingness to try. So she talks about confidence competence loop, where you're not confident to do the thing because you're not competent at the thing. So you need to be willing to try the thing so that you can go try it and then start to become more competent. And the more competent you become, the more confident you become, and more competent and more confident, and so on and so forth. sort of a virtuous cycle. The more you do, the more you can. The more you're willing to do it, the better you're going to get, and the more willing you're going to be to continue to try it. So the point being, have the willingness to try that thing over and over again, right? So to gain that competence, to gain the confidence, and then gain the competence, and so on and so forth. So if you're wondering why why do I not have the confidence to try this thing? It's probably because you've not done the thing enough times to develop the competence that encourages you to keep going. So everybody starts at zero. We had no podcast to begin with. We were very not confident when we started out. We are becoming more confident because we kept doing this thing and we've not given up. We're now in season 2. Also, that's so cool that we advertise season 2. Yeah. And people are like, wow, there was even a season 1. Like, what? So it's like, so for us, it gives us that mental like stimulus to keep going, because we're like, wow, okay, we were competent enough to do that. We can even do season 2 and even season 3. Same thing for golf. This is the one that really resonated with me, because first time I ever played golf, even after doing a lesson, I was so nervous. I remember we went with the firm. We went to Windsor. We were supposed to go to Limuru, but it was too foggy. We went to Windsor, and I was not confident at all. Though the first tee was pretty good, but then it got progressively worse. So by the end, I was like, I don't know if I'll ever do this again. Yeah. But now, and we just talked about this yesterday, I realized that it's now been over a year that I've been playing. And I'm way more confident because I keep coming and trying. And even when I fail, I get more competent. And it's just giving me the confidence to keep going. So the lesson being, just keep going. You're never going to find that confidence just sitting there thinking about how much better other people are or how you imagine your life could be. You just need to go out and be willing to try the thing, because confidence is not something you have, it's something you do.
Indeed.
Yeah, that's my interesting thing of the week.
That's a great lesson from you.
Mel Robbins, not my words.
Well, yeah. I mean, it's a great lesson for us, and I guess the audience will benefit from that as well. Yeah. In that you will get more confident by doing. So just do things. Yeah. And that's pretty impressive. Yeah. All right, wonderful. Thank you very much for your time. First of all, it's been a pleasure deconstructing the Nala deal and learning so much from Nala, what they're doing in Africa, and their plans to expand into Latin America and the Asian market. We wish Nala very well. We will be back deconstructing some other deals in due course as they develop. Hopefully they can be inspiring for other founders and investors. These stories are equally inspiring to us as well. Yeah. And so thank you very much for watching. We have a weekly challenge that's coming up to you. We hope you get to participate and find it interesting. Don't forget to like, comment, share, and subscribe if you haven't already done so. Yeah. Sorry, just one thing. Yeah. Because people might be watching and wondering why there wasn't Wisdom from the Course on the episode last week. Wisdom from the Course is going to be online on our social media pages. So if you want more of that type of content, please check us out on our social media, which if you're not already, I don't know why. So please follow us, like, and comment on there. And we'll get you some Wisdom from the Course live from the course on our social media pages. Indeed. And if you have any questions or topics you'd like us to cover, please let us know. Please engage with us in your comments, or you can send us a direct message. We'll be happy to respond and engage. And otherwise, thank you for tuning in, and see you next week. Goodbye. Bye.